All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades in Wall Street for Main Street. I'm going to try and get through this video a little quicker this week. I'm still battling an illness, as you can tell by my voice here, but I'm going to try and power through it here. Anyways, starting off with the S&P 500, you can see we gapped down on Monday, basically kissed that 100 moving average, had a little bit of a bounce, got back to where we broke down here at about the 472 handle, and then on Thursday we rolled over pretty sharply, and before getting a bounce on Friday here before the close. Now the story again here is the rising yield. So U.S. Treasury yields, they did pull back a little bit this week. It started off strong. Then we pulled back into Thursday, got a pop on Friday, but ultimately a little bit of a pullback. But that is the story that is keeping investors nervous. And basically the bottom line is, if the yield rises, it causes equity prices to be revalued. And that's really the long and short of it here. The biggest area that is going to get hit by this is tech. So if we look at the NASDAQ composite here, same deal, gap down into this little support zone. You have these little pivots here. This is where you started to break down and then you reverse. So that's usually support. You had a gap fill there. You also had the 200 moving average. So nice little big tail candle off of that. And then back tested this trend line here. And if we pull it back, you can see this trend line goes back to March on the composite, and you back tested the 100 moving average and failed. So a big rollover there on tech, and then did manage to close above the 200 moving average there on the composite. Triple Qs, same thing. This trend line that we've been following for quite some time. You guys know I've been following this for a while. Take a look at that one. So that gap down, and then a roll over there as well. Same deal. I've also been showing you guys the MACD. So this MACD here, we had this little wedge kind of building on the MACD, and look at how we're accelerating to the downside, and we're breaking through that that lower band there on the wedge, and this bearish divergence is starting to play out. So we could see some accelerated downside. Now we do have OPEX next week, so the market may want to hold up a little bit into OPEX. Typically, OPEX is not a directional week, meaning it's not really an up or down week. It's usually neutral. There's a lot of premium burning, and if it is negative, it's usually not a big negative week. And if it's positive, it's not a huge positive week either. So we could see some kind of backing and filling in the market before what I think is going to be another leg down. But let's take a look here. Let's unpack tech a little bit. So the semiconductors, we're holding up today. This is Friday here. They held up okay on Friday, but they had a mega reversal on Thursday. So sell off just like everything else Monday, Tuesday, and then Thursday. Look at this reversal. The market gapped up on the news of Taiwan Semi's earnings. So Taiwan Semi blew out there and gapped really higher, and that's what helped the SMH. But then look at the reversal on some of these names. KLA 10 Core, look at that reversal. NVIDIA came in sharply. AMD, Applied Materials, Micron, all these names came in and reversed off the highs. They did get bounces, but there was a major reversal yesterday. However, the real weak area in tech right now, and I've been pointing this out for a while, is IGV. It's cloud software. We talked about this bearish pattern. There we go, the bearish pattern on the weekly. So a sharp move down, inside bar consolidation, that broke down, and it's making those lower highs there. And yeah, IGV got a bounce today, but really still finished in the lower end of this red bar from yesterday, whereas you look at the semis, they recouped a decent amount, probably 50% of those losses. So the weakness right now is in cloud software. That seems to be the weak link inside of Techland, and that should continue for a considerable amount of time. And I do think eventually the semis will roll over as yields start to push higher. But in the near term, yields probably have a little bit more backing and filling to do. I know it got a nice pop today, but still a little extended from the 20 moving average. I think OPEX would be a good time for yields to kind of chop sideways before making another advance. So today we did have some bank earnings. So the XLF was lower here by 1% here. Not a huge move, but it was a bit of a mixed bag. So JPM got thrashed. JPMorgan down over 6% here. And this is a pretty deep cut. So you close below all four major moving averages, whereas previously, yesterday's close, you were above all four. So that's a big cut there for JPMorgan. On the other hand, Wells Fargo responded well, as did Citigroup. It came, was negative, but came off the lows pretty nicely. Still down 1.25. BlackRock was also down 2% as well. They reported today. And next week, we have Morgan Stanley, Goldman, also down, and I believe Bank of America reports next week. So that was down in sympathy to JPMorgan, but Wells Fargo really the lone winner today, up 3.6%. But we did have some bank earnings, and that will kick off earnings season. So we also have, let's take a look at the XLE here, pushing up to 52-week highs here, up 2.3%. So on the monthly, really a power bar here. We've been talking about this for quite some time. This will have resistance around 65, maybe 66. So you got this 200 moving average and the 100 moving average on the monthly converging. Those are two major areas, and you also have this big area of chop where you broke down previously. So you're coming into a major level on the XLE. Now I know it's had a nice run, and energy is got good fundamentals right now, especially with rising yields, but just want to be careful. You don't want to be chasing it up here. Let it give you a good pullback pattern or something like that if you're going to enter in the XLE. But right now, it's been a powerhouse, but it is getting a little long in the tooth, at least in my book. So let's take a look here at Crude Light. So that's kind of coinciding here with Crude here. So we talked about that level on XLE, and we have Crude kind of coming into a double top area as well. So Crude definitely exceeded all of my targets here. I thought that we'd have to pull back possibly to, just put my lines back on here. So I was thinking we'd probably stall out just shy of 80, and I thought we'd have to at least pull back to maybe the 75 handle or so, maybe down to 73 right here. But really Crude just kind of continuing and to chug higher. So, maybe it wants to get up to double top. And, that should coincide with that area on XLEs. It's not that far away. So we talked about the 65, 66 handle. That's right above there. And if we look at Crude, this double top, by the way, here's that broadening pattern. Look at that. So look at where you are with this broadening pattern, and look at where we are in XLE, and then this double top right in here as well. So there should be resistance for energy coming up in the near term. That doesn't mean it can't go higher eventually. It just means that, it's getting a little short-term extended, a little overbought, probably needs to pull back a little bit, maybe starting after OPEX week, or maybe it gaps up Monday and then pulls back or something like that. That's usually, that's a typical type of thing that happens when the stock gets overbought. Sometimes it gaps up on Monday and then it'll pull back in. But anyways, let's move on here. Talk about nat gas. So Natty, what a volatile week here. Great start to the year. I know you guys probably saw Jason's video. Nat gas had its best start ever to any year, and just a powerhouse move there on Wednesday, but it did come, basically reversed all of that on Thursday, and closed a little bit lower on Friday, still up for the week. But nat gas right now, I tweeted about this the other day. I said nat gas is trading like an altcoin. So you got this, sharp move down, a little bit of a bear flag here, started to build a bear flag, and then that flag failed, and then boom, power bar, and then a reversal. So just trading like total crazy volatility here in nat gas. Rejected that 100 MA. And you also had the 20-week moving average up here. So not surprising that it pulled back, but it is a little surprising how sharply it reversed here. So maybe some fund went long at this area, and as soon as it got up here, they sold, say, hey, well, we're going to get out break even, and they sold, and that's probably what caused that sharp reversal. But in any case, nat gas here acting well. It's just, near term, that's a really volatile move. I don't know if I would do anything with it on a swing trading basis right now until at least this starts to mature a little bit. But nat gas having a good start to the year regardless, even despite that reversal here this week. So let's move on. Let's talk about the dollar index. So dollar pulling back this week a little bit. This was ultimately, I think, kind of a buy the dip moment here, though. You pulled back. This was your support, broke through that, became resistance. Then what happens? You break out. What does resistance become? It turns into support. So you bounce off of this support area and the 20-week moving average, and then closed back above the 200-week moving average. So really just a kind of a test candle here, in my opinion, on the dollar index. I think the dollar will continue to move higher over the next couple of months. I still think it gets up to that 99 handle eventually. Ultimately, nothing really wrong with this pattern here on the dollar. Nice move there. Let's look at gold here. So gold really whipping all over the map here over the last couple of weeks. Did get a bid this week. Now is trying to sort of consolidate those gains a little bit. Again, there's just not a whole lot in terms of clear direction on gold until you get either one way or the other through these this little wedge pattern here. Once it gets through that, then I can give you a direction as to where it's going to go. You're going to have support down here, obviously at 1673. But if you get through this, then you're right up to 1950. That's going to be your first major area. And then if you get through that, it's obviously up to all-time highs. But as of right now, there's really nothing to do on the precious metals until they really tell us which way that they want to go ultimately. Silver, same kind of deal. Did make a higher low here, and I believe I did say if it can get up above, I believe that is, yeah, 2285. If it got above this red bar high, it would go attack 2350. So that's kind of where it's stalled out right now. Had a little bit of a green bar here, and now inside of that. So if it pulls back a little bit more, it can attack 2350 and maybe try to get up to that 24 handle in the near term. But ultimately, again, just really sloppy action here on the PMs. Platinum is a little bit better here. I like this green bar. It is kind of sloppy consolidation, but if it can make an advance, which I think it can get up to that 1020, 1025 handle near term. And Palladium is a total hot mess, but the weekly is a little bit cleaner. If you look on the weekly, so it looks like we had this bearish move here and then a failed breakdown, and now you're reversing up and putting in a bullish inside bar. So Palladium's actually starting to shape up a little bit here on the weekly time frame. So if this can advance, your first test would be 2084, that red bar high. A weekly close above that would take you right up to that 100 moving average there, around 2270. But Palladium, the daily time frame is an absolute mess, but the weekly is actually shaping up okay. Let's talk about copper. So copper attempted to break out here on Wednesday, did reverse lower, and then he closed back inside of this channel here. So again, we're really stuck back to square one here. So support is 434.5, and resistance is 451.15. You can sustain a break above this 451 area, you get up to 464, possibly. Let's take a look here real quick. I'm just going to do a calculation. Yeah, you could probably get up to about 470. I would say if you can hold this green bar low here and start consolidating inside of it, you can get up to about 470. But again, it still has to sustain above 451 first. And then if it breaks below 434, you're going to go back down here and test the lows around 425. But again, ultimately, this green bar here, this is all just bullish chop right now. At least for right now, as long as this green bar low holds, I'll give copper the neutral to upside bias here in the near term. Let's take a look here at Bitcoins. I'll flip over here to TradingView. Okay, so Bitcoin here getting a bounce just like everything else. So here was Monday's candle. You tested the lows here, and then we got a bit of a bounce, reversed on Thursday, just like everything else did, and then got a little bit of a relief bid on Friday. Again, this pattern is starting to look similar though. Look, so we had this, this was ultimately all bearish chop, but inside of that you had this little micro bullish inside bar that failed, and then it became a bear flag. Then we traded down, and now look, we're just trading sideways here. So possibly another bearish setup here on Bitcoin. Now, if it can close back above this 20 MA or this trend line here, then it can negate this head and shoulder pattern. This is a head and shoulder pattern. It can negate it if it can close back above this area. And if it does that, it's going to go back up. The first thing it's going to do is test 49,000. And then, if you get through that, you can go back up to 51 or so. But right now we're seeing sharp move down, and I'll just try to depict this for you. So you got this sharp move down, and then you've got the inside bar here. Right there. And then same thing on, right here. So sharp move down, and now you're just kind of inside here. As long as you stay inside of this lower range here, Bitcoin is setting up to move lower. Now, we did get the COT report out, and the commercials are still net short, and the non-reportables are still net long. And we all know that the commercials are always early, and you guys know I've been bearish crypto for really since kind of this breakdown here. Ever since it lost this kind of micro bull flag, I'm saying crypto's probably headed lower, probably down to 32 handle, and that's probably where it is going to go, and it looks like it is setting up to do that here. But for the near term, Bitcoin can hold up here. It does look like the equity markets are holding up, and Bitcoin is trading with the equity markets as of right now. Let's take a look here, one last look at the spiders. So I'm expecting some type of a backing and filling type, choppy type action next week. It is OPEX, but if we make another lower high here, we probably will lose this 100 moving average. And if that happens, we're going straight down to that 200 moving average, around 440 and change there on the SPY. That would be your next major area of support. Anyways, guys, thanks for watching. Thanks for bearing with my voice. Come check me out on Patreon. We're 11 for 11 to start the year on swing trading. Give Jason a like, subscribe, come check him out on Patreon. Best deal out there in the macro space, $5 a month. Same for me at $5 a month on my Patreon as well for swing trading. Anyways, guys, take care. Thanks for watching, and I will talk to you all next week.